Good afternoon. This is Bob Iacchino from Path Trading Partners, along with my co-founder Mike Arnold. It is August 6th, and this is a Path Chat Weekend Futures Update for the week beginning August 6th. It is Sunday. Our week begins on Sunday because of these futures markets that we're about to address. So let me just do a quick week in review, and then we'll go to the important economic news that's coming up for this week. So global equities jumped a little bit higher this week. We had continued strengths in the U.S. market. We've got a couple, more than one, new record in the Dow, not in the NASDAQ or the S&P, but in the Dow. The Dow jumped above the 22,000 mark during this week. And it was really aided by a weakening U.S. dollar, which bounced on Friday, and supporting U.S. economic data. The euro rose to an 18-month high. We're at levels in the euro now that we haven't seen since January of 2015, actually. And on January 22nd of 2015, Mario Draghi actually announced 1.1 trillion in quantitative easing. So that's where the dollar was versus the euro. That's where the euro was when this particular set of data came out. It was the largest quantitative easing program that the EU and the ECB had tried. And that was the beginning of the fall down toward what everybody thought was going to be parity, but ended up being a low of just around 103. With the euro to the US dollar. As I mentioned, we got the jobs number this past week, 209 headline number that handily beat the 180,000 estimate and the 180,000 6-month average that we've been running at. So it seemed like a lot of the analysts were running just with what the average would be. We have earnings, hourly earnings, holding steady at a 2.5% annual growth rate. Now that's good that it didn't fall, but it certainly didn't rise. We beat a little bit on the month-over-month average hourly earnings. It came in at up 0.3 versus up 0.2 expected. But again, the annual growth rate is staying steady at 2.5%. We had a slight uptick in the jobs participation rate, and we did not have an uptick in the unemployment rate. It stayed at 4.3%, which is still a pretty good sign given that the labor force participation rate jumped a tiny bit. Grand jury in the Russia election probe, Robert Mueller, special prosecutor. Robert Mueller, special prosecutor, announced that he is sitting in grand jury, which is kind of a good thing because you'll see less leaks out of a grand jury than you'll see out of anything else. And you'll also get to indictments if there's going to be, not necessarily quickly, but you need a grand jury to have indictments. Donald Trump signs a bill sanctioning Russia, Iran, and North Korea. He seemed to have a little bit of trepidation about signing the Russia one. He warned that this is going to hurt relations even more, and both Russia and the U.S. agree that relations between the two countries are at a recent low. The U.S. is considering trade action against China, so that's being talked about. We'll be watching for that this week. And Alan Greenspan did a CNBC interview talking about a bond bubble. And he was pretty clear about it. He was pretty stern about that bubble being in existence. Venezuelan crisis continues. The sanctions that the U.S. placed on Venezuela did not include not buying their crude oil, which would really be anti-humanitarian if we did that. So I'm glad we did not do that. And then WTI crude oil broke above $50 per barrel and then eased down near 49. It really fell pretty hard in one day and then kind of settled around 49. It ended the week lower than last week's 49.65. It's right around 49.10. That should be where it opens. That's where it closed last week, was right around $49.10. So still not breaking out, really. I mean, it really looks like a breakout if you look at very short-term charts, but if you go out to the monthly and weekly charts, you can see that it's really just a lower high. If we were to fall from this $50 break that we made this week, it's just another lower high, and we'll continue a larger macro downtrend. I think everyone agrees the macro downtrend is still in place in crude oil. So let's shoot over to the economic calendar for the week. Starting with today, the only thing we have, 6:30 Central Time, 6:30 p.m., is Australian AIG Performance Construction Index in July. There's no estimate for that. Shooting on to Monday, August 7th, got a few numbers. At midnight, we've got the Japanese leading index for June and the coincident index for June. Leading index expected at 106.2, coincident index expecting at 117.2. Those would both be up from the previous Previous was 104.6 and 115.8 respectively. 1 a.m. German industrial production year over year, and that's non-seasonally adjusted, expected to be up 3.7 versus 5 last time, so that would be a bit of a dip. U.S. consumer credit coming out at 2 p.m. Central Time, expected to be at 15.5 billion versus 18.41 billion last time. Then at 6:50 p.m., Japanese trade balance and some Japanese lending figures. Trade balance is expected to be up huge, 549 billion yen versus down 115.1 billion yen last. We've got the Australian Business Confidence Index, no estimate on that, and Japanese bankruptcies year over year. Last was down 7.47, no estimates on that either. Go to Tuesday, August 8th. Chinese foreign direct investment year over year was up 2.3% last, no estimate on this one, and there's no time on that either. It's going to be sometime after midnight. You've got the trade balance and the trade balance in yuan. Trade balance for July expected to be $45.2 billion or 291.8 billion yuan. Those are both up from the previous. Then you get down to 1 a.m., German trade balance in euros, expected to be at 23 billion positive versus 22 billion last. 7:15 a.m., Canadian housing starts. That number is supposed to be 205,000 versus 212.7 thousand last. You get all the way to 7:30 at night, and you've got Australian Westpac consumer confidence for August. No estimate on that. 7:30 p.m. Central Time. Canadian Consumer Price Index year over year. That is a big number. That's for July. It's expected to be up 1.5% versus 1.5 last. That'll be really huge for base metals specifically, and it could move currencies quite a bit. The Producer Price Index is supposed to be up 5.6% year over year versus 5.5 last. We're really looking for the consumer number though. And then you've got Australian home loans expected to be up 1.5% versus up 1% last. Moving on to Wednesday, we've got 7:30 a.m. Canadian building permits month over month for June expected to be down 1.9% versus up 8.9% last. We've got our usual Department of Energy crude oil inventories, which obviously is the biggest number for the week in crude oil. Later in the day, 6 p.m., UK house price balance for July expected to be up 9% versus 7% last. 6:50 p.m., Japanese machine orders year over year for June, expected to be down 1.1%. And then later on in the evening, you've got the Japanese Tertiary Industry Index month over month for June, expected to be up 0.2%. It was down 0.1% last. Getting on to Thursday, August 10th, Chinese new yuan loans. That's going to be in yuan. That's 790 billion versus 1,540 billion last. So about half. It's expected to be half the size of it was last month. And that is a very high level piece of economic data. 3:30 a.m., a slew of UK numbers. We've got UK industrial production year over year, expected down 0.1% versus down 0.2% last. Manufacturing production year over year, expected to be up 0.7 versus up 0.4 last. Construction output seasonally adjusted, expected to be up 1.8% versus down 0.3% last. UK total trade balance and trade balance non-EU expected to be minus 3 billion pounds versus minus 3.79 billion on the non-EU, and the overall minus 2.5 billion pounds versus minus 3 billion last. Then jumping down to 7 a.m., GDP estimate for the UK expected to be up 0.3% versus up 0.3 last. 7:30 in the morning, Canadian new house price index year over year, no estimate on that. But we also got the initial jobless claims and continuing claims for the U.S. The estimates are the same as they've been for a while now, 240,000 on claims, 1.96 million on continuing claims. Then at 6:30 p.m., RBA's Philip Lowe speaking before the House Economics Committee in Melbourne. That will be a huge deal for the Aussie dollar. Then moving on to Friday. Friday has some of the bigger numbers, especially in the U.S. here. 1 a.m., you've got Euro Consumer Price Index year over year. The final for July expected to remain at 1.7%. 7:30 in the morning, Consumer Price Index month over month and year over year, both core and X energy for the U.S. So let's go through these. Consumer Price Index month over month expected to be up 2% versus unchanged last. And the core month over month expected to be up 0.2% versus up 0.1% last. And the important numbers, the year over year. Consumer price year over year for July expected to be up 1.8% versus 1.6 last. And the ex-food and energy, the core, expected to be up 1.7% versus 1.7% last. Now, I'll put a little bit more of an emphasis on the monthly number than I normally do because you're not going to see a huge jump in the year-over-year number at this point. So I think they're equally as important, even though most services will list the month-over-month numbers as being of medium importance and the year-over-year being of high importance. Then you've got the US dollar real average weekly earnings. We saw the non-farm earnings, and that's really the main one. But the average weekly and average hourly earnings year over year are coming out at that same time. No estimates on either one. But the weekly earnings year over year was up 1.1 last, and the hourly was up 0.8 last. So they follow along with what we saw in the non-farm payrolls number. And then we've got the Baker Hughes rig counts. Rig counts on Friday fell for the second time in 3 weeks. And oil rigs decreased by 1. Overall rigs decreased by 4, so that means 3 natural gas. And oil rigs themselves fell by 1 to 765. So this will actually matter. The number does matter, but now that we've seen 2 of 3 falls in rig counts, including oil rigs, this will matter on Friday more than it normally has. When we're in a trend, it's just kind of supporting the trend. If the trend is reversing, that could push crude oil prices quite a bit higher if we start to see consistent falls in rig counts. That's it. Now let me turn it over to Mike to let you know what he's seeing on the charts. Mikey, it's all yours.
Thank you very much, Bob. So, VIX, you can see edged up 1150, staying slightly above that for a couple days, and in the 10s now edging back down. Probably see the 9s next week for a close again if it continues lower. So, again, not much fear in the markets in this range that's remained mostly since May. It's popped out a couple times, but mostly remained in the 10s, dipping occasionally into the 9s. Let's switch over to the financial futures. Take a look at what they did this week. So, we have the Dow futures, Dow mini futures to be exact. Let's expand this. All right, so that went to new highs on Friday. We're still keeping our GAN projections, so if we continue higher next week, we're watching for 22,100 essentially, followed by 22,136 and 22,170 to complete our next GAN pushes higher. If we do pull back, first level support 21,914 area, then we have the rising rotation zone which is coming in. If we have a quick drop, we'll be watching for about 21,870. And then on a bigger drop, 21,803. Nothing else to report there on the Dow mini futures. So let's switch over to the S&P mini futures. All right, you can see the Dow was making new highs. S&P consolidating just above the 12.5% GAN level. This is a very, very strong level. We have the bottom of the rising rotation zone in here. So what we're going to be watching for longer term is to get above 2,480.50. If we do get above that, next major target 2,489, then 2,497. If we do get down below 2,463 and then get a close below the rising bottom of the rotation zone, we could possibly see a drop longer term to the 2,446. There may be some support coming in about 2,451. We also at some point might get below this rising trend line into a clear path, which then the initial target would be that 2,446 area, followed by about 2,440. Switching over to the NASDAQ. NASDAQ also consolidating, holding just above this 25% GAN level. Let me zoom in on the chart here. You can see the 25% GAN level. We're going to be watching if it does get a close below this trend line and below the rotation zone, currently coming in at 58.66. Then we'll be watching for an extended drop, first target 58.32 followed by 58.16. Those are our two targets to the downside. If we do get up above this rising trend line right now, really above the 59.15 level, we'll be watching to target the 59.41 followed by the 59.60 area, and then a return to the highs. Checking in on crude oil. Crude oil rallied up, then consolidated right at the rising rotation zone. You can see it here. Closing at a significant level. You can see the significance of this level. It's been on the chart, and we have right below it the flat 200-day moving average. So continued rally, next target up 50.24. If we get through that, we'll watch for a test of this defining point coming in at 50.43. If you want to know what a defining point is, check out our trend line videos on the YouTube channel. Getting above that, next key level 50.75 to 50.83. And then if we break through that, we'll be watching for about 51.46. If we do dip down, pretty major support coming in this 48.50. If that is broken, we're going to be watching for a test of about 47.90 to 48. And if we do break through that, we'll watch for a return to about the 50-day moving average coming in about 47.34 right now. Switching over to gold. Gold, you could a really big drop. Tons of resistance in this overhead area, 1275 to about 1277. That's going to be key to the upside. If we get through that, you can watch for a test of 1280. Then through 1280, we'll be watching for 1282, then 1287. We closed below the significant level on Friday. If we continue lower, watch for key support coming in about this 1257. If that is broken, we'll watch for a return to about the 1250 to 51 area, which you have the flat but slightly rising 50-day exponential moving average and this trend line. So that's going to be key. If that's broken, we'll watch for a return to a significant level at 1246. And finally, to wrap up this weekly summary on futures, silver, very big drop. You can see on Friday, very big drop coming back down to this prior breakout and breakdown zone at this point. That's key support. It's now below the rotation zone. Any rally up, we'll be watching for major resistance around the 1646-47 area. If that is broken, a return to about 1658. If it continues to head lower, we're into a clear path right now. First level support, we'll be watching about 16 to 1603. Then major support coming in about 1589. And if that is broken, we'll be watching for about 1580. That's all we have for you with this weekly futures wrap-up. Turning it back over to you, Bob.
Thanks for that, Mike, and thank you guys for watching. Don't forget to like and subscribe. Check out our stock update video and check out the cryptocurrency videos if that's something you're interested in. Also, the Money Path podcast, there's a new episode out. Please check that out. You can find it at pathtradingpartners.com. or download it from Google Play or iTunes by typing in the Money Path podcast. We also have it up on our YouTube channel. Cheers, guys. We will talk to you in the next Path Chat.